break of structure, or change of character. These two signals are how smart money traders read market structure, and telling them apart is the difference between riding a trend and getting caught in a reversal. In this episode, we make both dead simple, then combine them into an actual entry trigger. Start with the basics. An uptrend is simply a series of higher highs and higher lows. A downtrend is lower highs and lower lows. Structure is just that rhythm of swing points. Everything in this episode comes down to one question. Is price respecting that rhythm or breaking it? When the rhythm changes, the story changes. A break of structure, or BOS, is when price breaks the most recent swing point in the direction of the trend. In an uptrend, that's a clean close above the previous high. A BOS tells you the trend is intact, continuation. It's confirmation that the move has more to give, not a reason to fade it. A change of character, or CHoCH, is the opposite. Price breaks the most recent swing point against the trend. In an uptrend, that's a close below the last higher low. A CHoCH is the first warning that momentum has shifted and the trend may be reversing. It doesn't guarantee a reversal, but it's the signal that says pay attention, the character just changed. Prop challenge, or leveling up your own trading. Signal Deck tracks every trade in R with quant-level analytics. Prove your edge. Free. Link in the description. Now combine it with what you already know. First, a liquidity sweep grabs the stops at an obvious level. Then a change of character confirms momentum has flipped. Sweep plus CHoCH is a classic entry trigger. The sweep sets the trap, the CHoCH confirms the reversal, and you enter on the shift with your stop tucked safely beyond the sweep. That's structure and liquidity working together. So, a break of structure means continuation. A change of character is the first warning of a reversal. Pair a liquidity sweep with a change of character, and you've got a real entry trigger. Next episode, order blocks and fair value gaps, the precise zones where smart money enters. Subscribe so you don't miss it.